Have you ever wondered where the money for roads, schools, hospitals, the army, and public services comes from? The general answer is very simple: through taxes. Many would have heard, but others won't know. There are two main types of taxes in India: direct taxes and indirect taxes. The easiest way to remember them is this: if you pay the government directly, it's a direct tax. If you pay while buying something, it's an indirect tax. Direct taxes are paid by the person who earns the income or owns the wealth, and the responsibility cannot be shifted to someone else. Indirect taxes are included in the price of goods and services, so the customer pays them while shopping, even though the seller later deposits that money with the government. Let's understand direct tax with a simple example. Imagine you get a job and earns rupee 10 lakh a year. Since you earn an income, the government may ask you to pay a part of it as income tax. Depending on the tax rules, you pay this tax directly to the income tax department. No one else can pay it on your behalf or pass it to another person. This is why it is called a direct tax. Other examples include corporate income tax paid by companies and property-related taxes in some situations. Simply put, the person who earns or owns is the person who pays. Now let's understand indirect tax. Imagine Priya buys a chocolate priced at rupee 100. On the bill, GST is added, making the total rupee 118 if the applicable GST rate is 18%. Priya pays rupee 118 to the shopkeeper. The shopkeeper doesn't keep the rupee 18 as profit. Instead, he collects it on behalf of the government and later deposits it with the tax authorities. The same happens when you buy a mobile phone, order food at a restaurant, book a hotel, pay for internet services, or purchase clothes. In these cases, the business collects the tax, but the customer ultimately bears the cost. This is why it is called an indirect tax. Here's a simple way to remember the difference. Imagine your school asks every student to contribute rupee 100 directly for a picnic. Each student pays the school themselves. That is like a direct tax. Now imagine the school says every snack sold in the canteen includes rupee 5 that goes towards the picnic fund. Students don't pay the picnic fund separately. They pay automatically whenever they buy food. That is like an indirect tax. One is paid directly, while the other is included in the price of what you buy. In India today, the most common direct tax is income tax, while the most common indirect tax is GST, goods and services tax. Before GST, India had many different indirect taxes such as VAT, excise duty, and service tax. GST combined many of these into one simpler tax system, making taxation more uniform across the country. Whether you buy a pencil, a television, eat at a restaurant, or book an airline ticket, GST is often part of the final price you pay. So, who really pays these taxes? If you earn an income above the applicable limits, you may pay income tax directly. But almost everyone pays indirect tax, because nearly everyone buys goods or services. Even a child buying an ice cream or a tourist buying a souvenir may pay GST as part of the purchase price. That's why indirect taxes affect almost everyone every day, while direct taxes mainly apply to those with taxable income. The easiest way to remember this forever is with one simple sentence: direct tax is paid because you earn. Indirect tax is paid because you spend. One comes out of your income, while the other is included in your shopping bill. Together, these taxes help the government build infrastructure, provide public services, improve healthcare and education, maintain law and order, and invest in the country's future. Now here's a question for you. The next time you receive a shopping bill, can you spot the GST amount and understand that the shopkeeper is collecting it on behalf of the government? Follow for more simple explanations of complex topics in just a few minutes.